We are in Brussels for ETC, and today I'm gathered with Carl from Six Man Ventures. Hi, Carl.
How are you?
How was your flight here?
It was amazingly smooth, actually. No issues. Got about 3 to 4 hours of sleep, which was very helpful on day one.
How's it been here for you so far?
It's been really terrific. I think ECC attracts such a wide array of developers and builders that any sort of question I have about the space and want to learn more or continue building a thesis, like there's many people here who are thought leaders in different areas. And so I think it really is one of those conferences that attracts the best and brightest. And I think the weather here has been absolutely perfect, as you're sitting outside and grabbing dinner, grabbing drinks, and just really getting to know the European community.
Have you been in Brussels before?
No, it's my first time.
Yeah. So you like it so far?
I prefer Paris, I think, compared to Brussels. But I do think the conference team has done an incredible job. The venue looks great. And a lot of the side events have been really cool so far.
What do you look for at ETC?
So whenever I go to a conference, I go for 3 reasons. One is to meet new developers and build new relationships. Secondly is to maintain existing relationships. Because as you know, a lot of venture is a relationship business. And if you don't intentionally build friendships with people and maintain those, they atrophy over time. So really just like catching up with friends that I've known in the space. Third is to pressure test 1 or 2 different ideas and really try to understand developer sentiment and what types of tools, technologies, and strategies are developers pursuing.
Have you found anything so far?
I have. So the 2 areas I'm looking into, one is the intersection of crypto and AI, specifically on the data layer. I think what we've seen on the venture side is there's been a large amount of different companies focusing on compute. So you have Ionet, you have Akash, you have Jensen, a number of others. There's some reasonably good definition taking place. There's some real demand that's being onboarded. So if you look at AI as compute plus data, those are the 2 core primitives that are needed. At the foundational level, I think the compute, we're on the right track. On the data side, I think there's a lot of room to grow, and it's really still a blue sky opportunity. So trying to understand all aspects of data for AI, everything from data collection, data labeling, synthetic data generation, et cetera. And so really trying to dive into that area and see who's building really exciting technologies. So that's one of my core things I'm trying to better understand. And Six Man Ventures, we are a Web3 native fund, but consumer is an area where we have a ton of experience and have made a lot of investments and really just want to continue tripling down on the consumer side. And as I look at crypto users and sports users, like sports enjoyers, there's actually a very large overlap there, but we haven't seen that many large sports crypto platforms take off, right? There's been a couple, there's been So Rare, Chili's, a couple others, but by and large, we haven't really hit mass market on the sports side. And I think it's a massive untapped opportunity. And so really trying to understand more about SportsFi, specifically where sports meets crypto. So those are the 2 categories I'm really looking to dig in this conference.
It's really interesting. Do you think there's something missing in that overlap with sports or something that needs to be taken further?
My assessment so far is the 2 biggest gaps are 1, licensing. So specifically, I can't build a sports experience and put Manchester United logo in the app because there's, copyright rights and other things. And so I think in crypto, it's still a small enough industry where we haven't brought on the heavy hitters that can really strike a lot of these licensing deals, mass market. And so I think licensing continues to be a key constraint. We've seen teams starting to work around that by creating their own virtual leagues. So for example, there's teams building football managers, but they're instead of having licenses with real teams and actually building out your own version of Manchester United, for example, you're building your own team on a fictitious league, and therefore you overcome that licensing requirement. So that's one approach people are taking, is just creating their own leagues versus building sports experiences for existing leagues. And the second one continues to be crypto onboarding. I think we still have a ton of UX challenges to solve, in particular, on and off ramps seamlessly. Technologies, once you get the money in, account abstraction has really grown. We have a number of investments there, but there's still a lot more work to do in terms of making it mainstream and really easy for users to use crypto. So those are the 2 biggest blockers I see so far. But if developers are out there, would love to hear what you see as the biggest blockers, and especially on the venture side, how we can partner to overcome those.
Take me back. How did you get into this industry?
Yeah, so I was at Google. I was a product manager there building the smart home ecosystem. There's thousands of device manufacturers that make everything from smart lights, smart cameras. And what our team did is built a set of APIs so that way any developer can plug in their product to work with Google. And we built the user experience to create a unified experience for the users. That way, if they say, for example, hey, Google, turn off the lights, whether you have a Philips Hue light or a LifeX light or any of these different brands, all the lights turn off. You don't want to have to like address each one of these lights uniquely. So we create a standard user experience for both voice, mobile, and displays that we have, the Google displays. So I was doing that, but then was really ready to move on to the next phase of my career. And I started building my own financial apps on the side because I enjoyed trading stocks. I enjoyed trading. I started building my own things. And I was like, wait, if I'm spending 4 hours after work building in the finance space, maybe I should just do it full time. And so ended up getting a product opportunity at Paxos, which is a regulated blockchain infrastructure provider based in New York. So that allowed me to move to New York. It allowed me to move into a very senior role on the product side, which is, a promotion was something I was looking for to build my experience.
What year was this?
This was, great question. So this was 2020.
You joined
Paxos? So joined during COVID. So it was a way to get into crypto. So I guess for me, primarily, I kind of stumbled into crypto. I didn't have at 2020, I bought some Bitcoin earlier, but I wasn't like crypto's the future and I wasn't completely red pilled yet. But Paxos was a great opportunity to break into the fintech space with like a new emerging technology, which is crypto. And so I ended up joining the company, had a fantastic time there for a year and a half, and just got so deep into the crypto space. And like once I spent time really building crypto, working with amazing engineers, working with incredible business partners like PayPal that are trying to get into crypto. Once I saw all these angles coming together, because again, as a PM, you kind of sit at the hub of a lot of this, completely red pilled and now full-time crypto and don't ever see leaving the industry.
So it was mainly like the DeFi side of it that really brought you in.
Yeah, and like the simplicity. Like I think everyone in crypto has those Eureka moments where like, holy shit, this is going to change the world. For me, one of them was I needed to borrow some money. And I was like, wait, I'm short on cash. I have lots of crypto, short on like literally cash. Like, how do I get an extra, let's say $15,000 or $20,000? Well, do I go to a bank and like fill out a loan application? Like, I don't want to do that. I also don't want to just put it on my credit card because obviously the interest rates are insane. Yeah. So I was like, well, how do I do this? And I was like, wait, DeFi can actually help with this. So I literally put a bunch of Ethereum into a smart contract, borrowed stablecoin, used that to meet some of my short-term liquidity needs, and then later paid it off. And it was just this simplicity that within 5 clicks, I could now access capital markets that I couldn't do in the traditional banking and fiat system. Yeah. That was just one of those Eureka moments where I'm like, everyone needs to be using this technology. It is so superior.
And how do you go from this to then venture capital?
Yeah, so I was a PM at Paxos. What I really liked about the side of venture is it allows you to be like thinking more broadly about the space than product, where again, if you're a PM, even if you're a senior PM, you're kind of focused on one product lane and you're become an expert there, but you're not really touching a lot of these other cool primitives like DeFi and others in most cases. And so I really wanted the opportunity to think more holistically. What I also liked about venture is you're playing a 100x game. Like every single day, you're trying to find the best and brightest founders at their earliest stages and partner with them for the next 5 to 10 years to create a 100x outcome. Mm-hmm. And to me, that is very exponential in the way you're approaching, the way you allocate your time, the way you allocate your capital. And I like thinking exponentially and living exponentially rather than on product manager where I know like, okay, if I work for X number of years, I get a promotion. I work X number of years, I get a promotion. It's kind of like more linear in a lot of cases. Or, if you're a PM, especially in a more established product, it's like, great, we're aiming for 10% growth or 20% growth. So living exponential, to me, venture is the perfect intersection of exponential decision-making, capital allocation, and actually on the back end, being able to invest directly against your thesis without a bunch of bureaucracy around. You just invest directly and work with the founders. And so I've been in venture for now 2.5 years and absolutely love it.
What was the biggest struggle going into venture?
The biggest struggle was, I think, being able to read founders initially, because again, like I've worked with a lot of engineers over the years. And so I can very quickly tell if somebody's a 10x engineer or not, just by a couple of basic questions. But to be a founder, it's not just about being technical. There's all these other aspects around leadership, speed of execution, decision-making. And it just takes some time to literally just speak with tens, hundreds, thousands of founders to build up your view of to understand what is a 10x founder. Like you need to speak with a lot of founders to literally define what that is. So I think, in the beginning, every deal looked really interesting. And then now I'm at the point where it's like, kind of hard to get me excited about a deal. Like when I get excited about a deal, it's truly, to me, going to be a home run. And, I put all my energy and time into that deal. So just that calibration process took time.
Mm-hmm. And how did you meet your other partners?
So at 6 Man Ventures, we have 4 partners. Mike Dudas and Serge Kasarjian co-founded the firm. Then there's myself, and then Aaron is one of our other partners, and he's based in Chicago. I worked with Mike Dudas at Paxos. So actually a really funny story. When I was leaving Paxos, it was at the time where a lot of traditional Web2 VCs were trying to get in crypto. And they realized they have no idea about this sort of counterculture community and the technology. Like they were clueless in how they were investing. So a lot of them said, hey, we need to bring on our Web3 person in order to lead our investments here. So because I have like a business background and I worked at places they understood like Google, but also had crypto experience, I sort of like in some ways like a good candidate for a lot of these VC firms. That is, they want to start moving into the space. In other words, I'm not some anon that's been building in Bitcoin for 10 years. That's, to a traditional venture firm, that's a very risky type of person to bring in. I love those people, but to a traditional venture firm, it's different. So I started to get a lot of inbound. And I actually got 1 or 2 offers at different venture firms. And so by this point, Mike and I worked at Paxos. He left to go do 6 Man Ventures full time. I said, hey, Mike, I have this opportunity. What do you think about it? He's like, look, I can't solicit you from Paxos, non-solicitation. He's like, I can't solicit you from Paxos, but if you're going to leave Paxos anyway to go to 1 or 2 of these firms, you should join us instead. And I ended up, getting to know Mike, getting to know Serge and the team, and absolutely fell in love. What really inspired me about the 6 Man Ventures team is, unlike a traditional venture firm where I'm the Web3 person, they are full-time in crypto. And if you think about venture, I'd say 80 to 90% of the success of a venture firm is what deals you see, right? Yeah. So it's like, do you see the deal? Can you win the deal? And then can you support the founder in the way they need to success? But one of the hardest parts is just making sure you see the deal. And I'm like, well, this team is incredible. Mike ran the block, the crypto research firm, so he knows everyone in the space. So the deal flow they had was off the charts. Okay. And so to me, if I was plugging in somewhere, being able to just help evaluate the deal flow that's coming in and over time start sourcing my own deals seemed like a better match than I'm going to now need to drum up an entirely new Web3 practice at a firm that may not be crypto friendly. And it was actually a great decision because I know a number of people that went to work for these traditional venture firms, but come, post FTX, everyone's like, hey, we're not going to really do crypto. We need you to find another thing. So a lot of them are now, left those firms, but, we continue to grow stronger as a firm. So it was the right decision. I guess a principle I took away from that is go join a business where what you're building is at the center of excellence of the business. Rather than a traditional venture firm where crypto is one investment area. It's like, go to a world-class crypto firm and like you're going to be at the center of everything. And so it was a great decision.
What did you learn from them, like working with them? Is there anything that stood out throughout the years?
With Mike and Serge and the team?
Yeah.
I think there's a couple things. I think with Mike, it's how to be fiercely passionate about like sharing your opinion with people, but also be very quick to change your mind when new information is introduced. In traditional bureaucratic organizations, it's actually really hard to change your point of view because it means like everyone's going to judge like, oh, you got this wrong, et cetera. But I think in the smaller, like we're not bureaucratic, right? We're 4 people. And so I think Mike is like really strong and excited when he talks to founders, but he pushes back on things. But then when new information is introduced, he like changes his position very quickly. But the entire time, even if he's disagreeing, he's a fierce advocate for founders. And we've seen this across a number of teams where, we are always there by our founders 100%. And I think a lot of firms, if things start to get shaky with the team, they kind of like back off or, all of a sudden I don't respond to emails. Like that's not us. Like Mike is a fierce competitor and partner for everyone he works with. And that is like really inspiring and something you actually don't see, that level of authenticity. And I think from Aaron in particular, one of the things I learned is he just spent like 10 years in venture. And so like how to think through deals, there's things he thinks about deals that don't immediately come to my mind. And then likewise, and hopefully like there's things I see that don't come to his mind. So he has a very traditional venture background. He invested in biotech and a number of different categories, has been doing crypto venture for now 4 or 5 years. And so that standard venture playbook about thinking about scaling businesses, thinking about moats, I've learned a lot from him in that practice. And of course, a lot from Serge as well.
You're based in New York, right?
I am.
Coming to Europe, like obviously the behavior in the industry tends to be different. What's something that stands out in comparison for someone that maybe doesn't go to the US as much? What would you say that in the US works very different than here?
I think so. We invest in a lot of European founders as well. So I think going to Brussels, I'm not really seeing what it's like to be in Europe. It's like this is a global community that descends on Europe. So,
that's true.
But generally, like still answering your question, just based on more data points than just Brussels, I think Americans, for better or worse, have an insane level of overconfidence, like confidence in what they're building. And you see that when you talk to some European founders, like I think we can hit 10 or 20% growth or something like that, versus American founders, again, across many data points, there's of course outliers on both sides, tend to be more like we're going to aim for the stars and we think we can do this, and then they may fall short of it, but like an insane level of overconfidence. And I think though you need to be confident. In other words, if you as the founder are not confident, there's no way you can inspire confidence in everyone else. There's a time where confidence turns into arrogance. And, that's usually because you're ignorant of certain pieces of information or certain data. So arrogance is not good, but confidence is. And confidence is what inspires your people to partner with you, other businesses. It inspires your team every day. And so I think, just having high levels of confidence is required for being a crypto founder, but also in life.
And as you go through deals and meeting so many founders, what's something that stands out that founders tend to lack?
Yeah, well, what I guess tend to lack, maybe I'll rephrase it a little bit, just because I think this is a really important point that relates to your question. One of the things we've seen is how founders approach their fundraise process is almost maps one-to-one to the success of the company. And what I mean is there's founders that can be either very slow in their deal making process and like it goes on for a couple months, and like maybe there's like a lack of urgency there sometimes. And if a founder does that, we've seen that is the way they also approach their business. And in startups, you need high degrees of urgency. So we'd much rather have founders that are pushing us like, hey, I'm available at 10 p.m. tonight. Are you able to get on a call? And like that level of borderline insanity of like, this is my life and I want to, my life's work and I want to grow it. That is to us much more inspiring. So I think like how you approach your fundraise is how you will approach your business. I think the second thing is like promptness of communication. There's some founders where you send a message and like within an hour, usually you're getting a response. Obviously people are sleeping, but like generally they're like always on type people. And then there's founders that, it might take 2 days to get a response to a simple text. Hey, like what's going on here? Can you take another call? And then like 2 days later. And we see that, even when we have invested in some of those deals, it's just like the promptness of communication isn't there throughout the entire process, right? And then like once we invest, like in the way they run the company. So you really need to be prompt in your communication because that's a signal that if I'm prompt with you, I'm going to be prompt with my customers. I'm going to be prompt with my customer service, sort of every aspect of the business. So I can go on. I think maybe the last thing on that front is how you negotiate. Like some people, I think, under negotiate a deal and they sort of like accept the term sheet as is. I think others over negotiate and like and sometimes like really strong willed about particular things. And what we've seen is there's times to be focused on some of the details because they're critical, but then there's times where you just need to be like, we need to get the deal done. And like, even if we give and take on certain things, like let's get the deal done and move forward, rather than we see some of these diligence process drag out for like 2-3 months with certain teams. And I'm like, you're spending 3 months on this process is you being distracted from actually building your business. Mm-hmm. So I think founders that are like, let's get the deal done as quickly as possible. And how can we make that happen? Very collaborative, but moving with urgency. So as you'll see throughout like all these different points, urgency is key, especially because as a founder, you only have sometimes 2 years of runway. And like if you're not thinking urgently, you're not going to be successful most likely.
Right now, there's a lot of focus on tokens, mostly from Asian funds, but it's very common for a lot of funds to have this focus. And do you think that having a token is going to be the standard? Do you think it's going to be something that's going to fade? Do you think it harms the company in some way? Because there's so many opinions. What is yours?
So I think it depends on the business, first of all. I think businesses that introduce a token without the plans to decentralize or really create utility for the token, I think those are the most specious, where like the token doesn't align to the strategy. It's just like a liquidity grab, and like that usually does not work well, right? And so I think you really need a token to be fully aligned to your company strategy. And I think if you do that, like tokens are incredibly important. I mean, if you think about crypto, it started from community ownership. It started from resistance from intermediaries and censorship from big banks and others. That's where the Bitcoin, white paper really came from. And so if you have a token, it really creates ownership of the community rather than of like the corporation. And I think that is just the core ethos of crypto. So I don't think tokens are going anywhere. In fact, I imagine there's going to be many more tokens over time. I mean, we've already seen it in the form of meme coins. We've seen it with all sorts of infrastructure tokens. But I do think when you launch your token is important. I do think teams bias too early rather than too late. I don't know if that's because of investor pressure. I don't know if it's because the founders are just seeing everyone else launch tokens. Like, I got to launch a token because everyone else is, right? And what if it's too late, if I do it in the future? So I think people have different reasons for why they do it. But yeah, I think tokens are so critical to crypto.
So you believe that the community will start holding it for longer instead of just buying it, like just selling?
Yeah.
That's the main issue, right?
Yeah. So actually, this is great. So we at Six Man Ventures, we also have a very big research practice, and we analyzed over 2 million wallets to understand their behavior for airdrops. So we have this piece, it's on our website, sixman.ventures, and we analyzed 2 million wallets and across 40 different TGE events, and really try and understand 2 questions for founders. One was, how much of my token supply should I airdrop? And 2 was, who should receive that airdrop? Right. And so we actually broke it into 4 taking those 2 axes, we broke it into 4 different quadrants, where you can imagine one quadrant is we airdropped a smaller portion of the supply, like less than 10%, to core users of the protocol. In other words, people who have actually engaged with the protocol. Likewise, there's the opposite quadrant, which is we airdropped a large amount of tokens to a bunch of different people who've never used the protocol. For example, teams that airdrop to an NFT community where all the person needs to do is sign up in a Discord and they get tokens, right? That's what we'd say is a widespread airdrop versus core users. And if you airdrop to widespread audiences versus core users, again, across 2 million wallets, we saw that users are 2x more likely to sell if it's a widespread airdrop versus those who are actually core users of the product. And then secondly, the goal is not only that people not sell right away, it's that they see the vision and hold, but that they buy more. And the only category where people bought more was a smaller airdrop to core users of your protocol. And it kind of makes sense. If you have people who have power users, love what you're doing, and then they're like, wait, I want to get more of this token because I'm really bullish on this. So I think, the people have really I think gone astray in terms of airdrops. And I think really just focusing on your core users and those who are early in your journey, I think they can be wildly successful, but they have to be done right.
Give me some examples who's doing it right.
I think so we are very big investors across every ecosystem. I think Solana is one where we have the most reps and experience. We're investors in Jito protocol. And I think what they did a couple things really well. One was they actually had their product live for a long time with many users already. They're an MEV product on Solana, so they already had lots of amount of volume coming from searchers and submitting bundles. They also had a large amount of Jito Sol, their wrapped Solana liquid staking token in the market. So I think they were actually launching their token at the right time. Like they had a product, they proved out the product market fit, and so people could very easily see, hey, this has been de-risked a lot, and we can see how these revenues are going to continue growing over time. And what they did is the way they did their airdrop was really simple. It was just based on who's held the Jito Sol token, and then based on how much you held times the amount of time you held it, like basically just like that simple math, and that's how they distributed their airdrop. So instead of rewarding farmers and a bunch of weird behaviors, it was the people who actually helped grow the AUM of Jito Sol. And I think, again, so they fit into the core users. I think smaller airdrops. So you airdropped about 10%, I believe, and they only airdropped it to core users of the protocol. And so they kind of hit the playbook. And I think because of that, their token price has gone up like substantially since the airdrop. Now with the recent market pullback, it might be lower. I don't know the current price, but like generally it was a positive trend for that protocol, unlike many others where it was, very negative.
If you think like in a couple of years, currently we're going through this phase of the cycle. What do you think is going to happen next? Because right now, like as I mentioned, like the current segment with the tokens is going through this phase, whatever you want to label it. What do you think happens next?
On tokens or just crypto more broadly?
On tokens specifically.
I think points programs will continue. I think we'll improve. So we made an investment in this company, Absinthe Labs, and they help teams launch points programs, but they also provide a Cybele layer. So they make sure that they can detect bot farms based on a number of different heuristics that they categorize. And I think points are great, but they just need to make sure they're not botted. And so I think that technologies like that and approaches like that are going to be very important because, again, like one of the valuable things about tokens is it helps bootstrap the network. So if everyone waits too long, like if you wait until you have like a very thriving business to launch a token, like it's not a bad thing, but you kind of didn't utilize one of the largest benefits of tokens, which is helping to bootstrap the network. So I think we're going to see just better approaches to points. I think it was too widespread before. And I think teams are going to hold a little bit more token supply in reserve to do sustained points programs. So instead of, hey, we're going to airdrop a large amount and then, no more airdrops, we're all done. I think you'll start to see, we saw this with Blast, like where there's different seasons that take place where, hey, like we want to keep users engaged with the product. So let's structure these over a longer period of time. I think that's also a very, very positive trend.
For everyone watching, where can they find you?
So on Twitter, Carl K. Vogel, on LinkedIn as well. And then at sixman.ventures, we have all of our research and highly recommend you check it out. Feel free to ping myself or Mustafa, who's on our research team, or anyone else if you have questions.
Carl, thank you.
This has been excellent. Thanks a lot for having me.
Hey, what's up?
But it's not something Genzio is afraid of.
If you want to survive, you got to build a house.
How many know we do not understand?
Ladies and gentlemen.
You're back at the Genzio Media House.
Awesome. Well, thanks so much for joining us today.